A recent JP Morgan study shows that 17% of you personal investors are investing in crypto, while 35% of institutions are investing in crypto. Do you think crypto is right for you? Do you think it's a scam? Do you think that it's in a bubble? Do you even understand what crypto is? Stay tuned, learn more. Let's talk about crypto. Welcome to a Wiser Retirement Podcast. Are you curious if cryptocurrency is right for you? I'm Casey Smith. Today, I'm joined by Robert Sorthout, founder, CEO, portfolio manager of Teton Crypto Capital. Each week, we bring you practical advice on retirement, investing, and planning for your financial future. Don't forget to subscribe to the podcast wherever you're listening. Let's get started. Hey, Robert.
Hey, how's it going?
Welcome back.
Yeah.
So this is kind of like a retro. It's kind of like the big wide paisley ties.
Yes.
From a long time ago.
Yeah.
They're coming back.
Oh boy.
I don't know if that's true or not, but
Okay.
I saw a paisley tie, except it wasn't wide, it was skinny. Things never come back quite the same.
Correct.
Including podcasts.
Mm-hmm.
So we did a topic just like this in episode 14.
Long ago.
That was long ago. I don't know. Did we have masks on back then? That was 2020.
We probably weren't following protocol.
We probably, yes.
But yes, it was fall of 2020. It seems like yesterday, but also seems like forever ago. So.
That's right. So just like style, how we answer questions could be totally different 5 years later.
Yep.
Because we've grown and learned things.
Yeah.
So
especially when you're talking about technology. Technology, obviously, next week could have a different answer. So
yeah, absolutely. So let's go back and answer the questions again from 2020 about crypto.
Sounds good.
So since 2020, Wiser Wealth Management, our firm, we've introduced cryptocurrencies into portfolios
as an option.
You built a whole company that invests in cryptocurrencies, right?
Yes.
So we both have come a long way in 5 years.
Yeah, when we talked the first time, it was just something that I was doing personally. And I was curious about. Like you mentioned, I've started a fund that does those investing, and then obviously as it became, I guess, as your investment team got more comfortable with having it in portfolios, gave clients the option, which is really cool. So
yeah, absolutely.
It's and you're, I guess, a year and a half into that journey or something like that.
Yes,
so, awesome.
So the adoption rate at Wiser has been around 20%. So the JP Morgan report says 17% as of early 2025, 17% of personal investors are in crypto. Those, in my experience, the people who under 30, 100% in.
Yep.
And the people with, I'd say $2.5 million or more in liquid assets, no matter what their age,
right,
100% in.
Right.
But there's a huge gap in the middle.
Yeah. So, when you said the 17%, one thing that came to mind was it'd be interesting to know the numbers if you back out the percentage of the population that just doesn't have savings, right? They can't take that $500 emergency hit. Like what does it turn into? 50%, that 17%? It'd be interesting to know the numbers. But it still is a low number, nonetheless. So it's, but I would say in my experience running my fund, it is definitely the crowd that is the older crowd, that has that, more discretionary, money for investments. And, it's some level, I wouldn't say it's an investment that you should expect it could go to zero, but it definitely is on the riskiest end of all, investing you probably will likely be doing. So,
well, before we get into our, retro questions here, the only thing I would push back on that is it is risky. Or it's volatile. I would say that volatile is a better word. Yeah. You have a higher chance of loaning money to your brother-in-law and never seeing that money come back ever again than I think you do losing money in Bitcoin.
Like it's not going to zero. I think the zero case is off the table at this point.
Absolutely.
Yeah.
We have real uses. There are real transactions happening around us every day that involve cryptocurrency. The problem is that as everyday people, we don't really see that yet.
Yeah. And, this may answer one of the questions we're going to go through, but the economic / monetary system in the US works pretty well. Like our debit cards work each day, our credit cards work each day. There's countries around the world where that's not the case, where crypto actually may be more meaningful for it, like on a transaction basis to a retail person.
Which is a great segue.
Yeah.
What is crypto? What does crypto really mean? And what is the context of personal investing?
Yeah. I mean, functionally, it's internet money. I think people have heard that in maybe the negative context, but I think it's a right answer. It's money that runs on a blockchain. A blockchain is just a database at the end of the day, very, very simply. And there's a lot of math involved about making sure that the balances are all the same. And there's different ways to set up blockchains, but fundamentally they're all, each thing is linked together, literally why they call it a chain. And you can kind of go back in history and kind of see the changes over time.
So you think about another currency that has nothing to do with a government,
right?
With the advantages of that. I mean, since 2020, we've seen a tremendous amount of new federal deficit. Dollar
major deficits.
Dollar starting to decline again with lower interest rates. I don't know that anybody says, okay, the dollar's not going to exist in 20 years, but what if the dollar struggled? I think a Bitcoin type investment is a great addition to a portfolio.
Yeah. I forget if I've mentioned this in other podcasts with you, but like one thing I've said on my podcast is that I believe that the stablecoin market, and we'll talk about stablecoins here in a minute probably, but like the stablecoin market is likely to be such a big buyer of treasuries over the next, call it 5 to 10 years, that it may save the dollar's place as a reserve currency for a period of time that otherwise it wouldn't have been.
I didn't believe that initially, but I definitely believe that now.
Yeah, it's like how quickly that's changed. It's like 2 years ago, we were talking about stable coins, but not like we're talking about them these days.
Yeah, and do we even need Japan and China buying U.S. treasuries at that point? No. Because the stable coins would be in such demand.
Right. And there's like a massive vacuum. It's just like sucking up treasuries.
And that has all to do with the Genius Act.
Yeah, that definitely cemented it. If you want to have a dollar-backed stable coin that is eligible to be used in the United States with basically citizens, it has to be backed by certain things, cash or cash equivalents. Obviously, treasuries fits in that bucket. So
think about the last 5 years since we originally aired this. How has crypto changed so much?
I would say the big change, I mean, not to be negative, is it? We talked about a lot of negative things that were around crypto 5 years ago.
Yeah,
even as much
jail.
Right. Well, that was even before SPF. I mean, he was aspiring at that point.
That's true.
But in this case, we talked even as recently as 2 years ago, in 2023, about the negative side of crypto, and the negative things that revolved around crypto. I wouldn't say crypto's not perfect. Nothing is perfect, but I think that those negative headlines are largely not an issue anymore. If anything, the negativity around crypto may be, it's down 10% today from time to time, right? If you watch the volatility day to day, which I advise not to do.
No,
it'll drive you crazy.
I have I've talked about this before, but there's it's called Tidbitty. It's a little box. It has little lights, and you can put all kinds of apps on there. But one of them is the Bitcoin price, along with like the airport weather and things like that. And I passed by my office like 5 days ago, and I glanced up, and after the Falcon score, I think it posted
Bitcoin price.
Bitcoin 122,000. I was like, oh, wow. And I was getting in my car this morning. I passed by the office. I looked to my right and it flashes and it said 102. And I was like, oh.
Yes. Crypto, we jokingly say in the space that October is generally Uptober. I put that in my newsletter that I wrote earlier this month. And I'm like, why do I do these things to myself?
Right.
Because it has been nothing but volatility on the downside this month.
Right.
And there's been some shenanigans that happened with the day that Trump was tweeting about potentially putting more tariffs back on China. There was some basically front running of that news with some Bitcoin shorts. Somebody made a couple $100 million. There's nothing technically illegal about that right now because we don't have regulations defining that it should be illegal.
Right.
Hopefully soon we have regulations that define something like that is illegal because that needs to stop.
Yeah.
It's frustrating being in the space and seeing that happen because it was a good day for whoever that person was, but it came at the expense of a lot of other people.
Right.
It's that's the kind of negativity we talk about today. But otherwise, it's generally great news, especially since the election. It has been up and to the right for all intents and purposes since November.
Well, it's something that Trump campaigned on was to bring legitimacy and regulation to
campaign on, and he's
Bitcoin,
seemingly following through so far too. So
yeah. So what you think about things that evolved the last 5 years? I don't feel like I hear as much about meme coins as as I used to. I could be disconnected from that actually.
Yeah.
But I feel maybe it's because I only talked to you about this, but more about utility and purpose behind each coin, where I don't see a whole lot of Doge and
I would say you probably are correct because you're hearing it from my lens. I tend to ignore a lot of that. There's people out there that are definitely in meme coins. Heck, there is a Doge ETF. If you wanted to go buy Doge right now, you could do it in clients' portfolios since you're all ETFs.
Oh yeah.
So probably not something that I would see you guys doing.
I didn't realialize they launched that.
So
a Doge ETF.
A Doge ETF.
That's horrible.
So I used to hate meme coins. I was like, they're a distraction, they're bad luck for the space, all the things.
Right.
Not that I invest in them or I find them interesting, but I've come around to view them as it's pop culture, and it's a way that a generation that finds it interesting to buy into pop culture. And in some ways, it's no different than the 1995 Beanie Babies, or it's no different than buying baseball cards or whatever it is for that generation.
None of that was in your retirement portfolio.
Correct. So maybe this is bled into the wrong area of life. But I would imagine that if you looked at the overlap of who's buying that ETF, it's got to be the Robinhood portfolios, because that's probably skews very young, that group. So anyways,
because there's no and if you're still learning about cryptos, there's no utility behind a Doge coin.
Right. It is.
There's no purpose.
I wouldn't even. I mean, it's a form of gambling in the sense that you're buying something that could go up or down. Yeah. But it's not used for anything outside of you just like. There's so many like of those tokens out there. It makes you feel rich if you look at the number of them that you might buy. It's like almost like monopoly money at some level.
And you're hoping that it just jumps up. It's like these penny stocks.
Whether it's any of the small altcoins, whether it's the meme coins or not, when they're like less than a penny a piece, when you look at on a per token basis, or even a fraction of a penny, the whole game that people play mentally there is, oh my gosh, if one of those zeros go away or two of those zeros go away, right? I mean, I get it. It's a 10x or 100x return.
They're looking for the next Bitcoin.
Right. And like, Bitcoin worked because it was the first and it had a crowd around it. A lot of these others have crowds around them, but they're not first. And you have to understand that. I mean, in my opinion, there's at least 20,000 cryptos. Some measure there's millions. Most of them are just absolute trash because we could sit here and make a coin in 5 minutes. We could launch it. What doesn't mean it's worth anything. It's all about marketing, right? Yeah. And that's the pump and dump nature of crypto.
It'd be the whole Trump coin thing. Those have no...
See, that's the pop culture one again, right? Yeah. It's almost...
It's like the gold coin on late night TV, and you could buy it for 4 payments of $19.99.
Sure. I mean,
I guess old timers would be at least they get a coin.
They get something for it, yeah. I mean, the SEC did come out, I want to say back in late spring, early summer, and said that meme coins are not securities because they're more akin to collectibles. It was the definition. So that's this
it's almost
SEC.
like an NFT, but...
Right, absolutely. So they're saying NFTs likely are not securities. NFTs can kind of blur the line in some cases because some of them can have a cash flow mechanism to them. So that starts being a little bit different. The SEC, I don't think, has given any sort of ruling on that piece. But it's so they basically immediately cleared the Trump coin, the Doge coin, all those things kind of like were able. So you're starting to see some celebrities launch meme coins of themselves.
But you think about that.
It's a money grab.
You buy, totally. Yeah. It might be a transfer of wealth from those who don't have anything to people who do.
Right, absolutely.
But you think about baseball cards, the collectibles of old.
Mm-hmm.
You have something to show for you. You have something to throw in your attic or whatever.
Mm-hmm.
In this case, and maybe I'm just totally disconnected from this, but is someone walking out going, hey, dude, check out all my coins that I got? And, how does that, you just say that you have it or you have these coins or?
I don't think I can answer that question. Maybe you should ask Owen, your son.
He's not buying any of this stuff.
I think there's a generational group of people, and I don't know if it's the young millennials or what it is, but there's definitely a group that has gravitated toward it, and partially because it's the chance of I might get rich off this. Like there's no doubt that there's an element of that. Whether that's 10% of it or that's 90% of it, I don't know. But
so it's like the new version of multi-level marketing.
Yeah, I often describe crypto in general, but especially the meme coins, as like buying a long-dated option. Like these just functionally don't have expiration dates. That's the only difference.
Yeah.
They can be highly changed in price by if say Elon Musk started tweeting about Doge again, I guarantee you that is going to be up crazy in a short period of time because now Doge is going to be in everything Elon does. Obviously not going to be the case, but that's what people believe. So,
well, okay. So that stuff still exists from 5 years ago, I guess. But hopefully investors are becoming a little smarter and understanding the utility behind cryptos. I feel like that over the last 5 years, speaking of utility, that we've understood maybe the purpose more, and we have clarity from, only in the last 9 months do we have clarity on
stable coins.
Stable coins.
The most basic of basic.
Yes. But no, XRP. I mean, we got clarity on that eventually.
Yeah, through a ruling. There's still plenty of work that Congress needs to do. First, they need to get back to work, get out of this shutdown that they're in, and then they can get back to working on the Clarity Act, is what they're calling it. Basically, bringing the rules of the road for crypto into law, so we have regulations around that. That would be a massive value unlocked. It may not be like the next day, but over time, that's how a lot of builders will be able to have the confidence to be able to build in the United States, the biggest economy in the world. So
I'm gonna give you a list. This is impromptu.
Okay.
All right. This is the top 10 cryptocurrencies by market cap, because I'm excited about an ETF coming out to hold the top 10.
Yeah, index, absolutely.
All right. So I'm gonna go down this list.
Okay. And
you kind of tell me what they're for.
Oh boy. Okay.
But you can only do it in like three or four sentences.
This is a challenge. Okay.
So Bitcoin.
Digital gold.
Okay. Yeah. Because we're not really transacting in Bitcoin. No one buys things in Bitcoin. Right?
Correct. Transactions take up to 10 minutes and they can be $3 or $4. I mean, that is not what crypto is made for.
Okay.
Yeah.
Ethereum.
The jack of all trades internet computer. So currently a lot of DeFi runs on Ethereum. But I think long-term, the shortcomings of it not being fast and other things is what's going to end up eating it alive.
So maybe not a good long-term hold there.
Correct. I understand I'm on the outside when I say this. I think 10 years from now, Ethereum is not in the top 10.
Interesting.
I think Bitcoin's not in the top 5. I think utility tokens are going to be that massive. Granted, I'm very much, that's the hat that I wear. I get it.
Right. That's the fun that
that's the fun that I run. Yeah. All transparency. But I think that is the world we're going towards, is in my opinion.
Tether's
stablecoin. So that's USDT.
Yep. BNB.
That's the Binance coin. So whether that's a security or not, you might have to squint and say yes or no. But at the end of the day, it is, there's some DeFi that happens on that. It's a faster chain. Does it work long-term in the US? I don't know. There's some questions I think unanswered there. Long-term, I think it's international.
XRP.
Made for payments. Ripple uses it. We've talked a lot about that in other podcasts, but it's purpose built to have fast transactions that are cheap.
$2.46 a share for that. Now, I remember it was 19 cents.
Yes. It's been a fun last year.
Solana
is basically almost like a version 2 of Ethereum in some sense. Some people say. So it is a network that does DeFi. It's faster transactions. There's a whole community around it. It was a network built and funded by VCs. So that's a bit of a twist that these others don't necessarily have.
Yeah.
Solana, they all have communities. These communities like to do infighting amongst other communities, almost like little tribes. But Solana is one that I personally am not a big fan of.
Before we get back into the episode, have you ever wondered why annuities keep coming up as a recommended investment? While they're often pitched as a way to reduce risk and secure your future, annuities frequently benefit the salesperson more than the investor. Download our free guide, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity, at wiserinvestor.com/guides. Now let's get back to the episode.
Is Solana going to be a competitor with Ethereum or XRP? Or are they going to be able to all work separately, independently?
So where you start really slicing these things up is Ethereum can do smart contracts, Solana can do smart contracts. XRP does not currently. So they compete at that level, Solana and Ethereum, and probably some other ones down the list we're going to talk about will also have smart contracts too. It's just all about what they attract. Solana is actually, over the last year, like the Trump meme coin was launched on Solana. So like it wasn't on Ethereum. So so there's those pluses and minuses, and it's just preference at that point.
Well, I'll have a follow-up question to that answer.
Yeah.
So it's like Betamax versus VHS here, or is it a world where both live? Because you're talking about two different systems.
Two different totally systems.
Or is it kind of like websites? Some are built on WordPress, some are built on
they're
whatever.
Yeah, I would say it's almost, you might use the analogy, some websites run on Amazon Web Services, some run on Google Cloud, some run on Microsoft Cloud.
Yeah.
I think that may be a better analogy because they're very similar technologies, but underneath the hood, they can be built totally differently.
Yeah.
Yeah, I think I'll probably leave it there. So
number 7, easy, USDC.
So the second biggest stable coin, Circle, they went public this last summer.
Yeah.
And I think we talked about that a couple episodes ago.
I don't know how to follow this one. TRX.
Yes, I follow that one so little that I probably can't quite give much of an answer there. So I believe that one, is that Tron? No. TRX is different than
TRON, Tron.
Tron. Okay, yeah. So the TRX is the shorter version of saying Tron. It's just another network. At one point, they may have been privacy focused. Some of these chains have done some morphing where you can't tell who's doing transactions. I don't want to be quoted on that one because I might be wrong on Tron, but yeah.
It's only 32 cents.
Well, price doesn't matter because it's all about, no different than a stock. It's about with the float, how many tokens are.
Yeah.
So that's what makes market cap.
Oh, that's true. Yeah. 30 billion.
Yeah.
Yeah.
So Bitcoin only has 21 million, but has a higher price that gets it a high market cap, right? It has really high price with a decently high number of tokens. XRP has 100 billion tokens.
Right.
It's, trading at 247. But anyways, it kind of gets in the weeds. So it depends upon the float outstanding. So.
Well, then there's Doge after that, which we've already talked about.
Total meme coin. Yep.
And then number 10 is Cardano.
Yep.
So, ADA.
Yep. So that's another one that is got some smart contract capability. So it, early on with the internet, there was all these websites popping up that were trying to sell books and do different things. I think we're kind of in that stage of crypto right now. You see a lot of them trying to target the same thing or similar things. I think over time you see a little bit of consolidation. We don't have 20,000 of these things 10 years from now that are actively like important.
Right.
And not that we have 20,000 that report.
There's 100 on the market cap list.
And that's just the top 100.
Yeah. That's just the top 100. Yeah. And you keep going. You can keep going down and down and down, but that's interesting that you have a meme coin in your top 10.
Yeah. That just shows how big the community is around it.
Yeah.
And, the last thing I would say about market cap is I view it as a risk scale. If you look at all of crypto, Bitcoin, number 1, all the way down to whatever is at 20,000, as you get further down that market cap, the risk goes higher and higher and higher and higher, exponentially probably.
It'd be like large cap, mid cap, small caps.
Right. But there's regulation around stocks.
Right. True.
We could literally start the Wiser coin again in 5 minutes and we could make 100 billion of them. They're worth zero.
We will do that after we launch our merch store.
There we go. But we can make them, they're worth zero. All you need to do is sell one to me for $10 and all of a sudden it's 10 times your float. And all of a sudden that's what your market cap is in crypto. Makes no sense because there's no liquidity to necessarily support that.
Yeah.
So liquidity is supreme. And that's not what these market cap rankings do a great job of illustrating. So
yeah, it'll be interesting to see how these new ETFs, how they sort, because I could totally see some of these dropping out and others are rising to the top. And how often is it quarterly you reset? I'm sure those answers are all in the offering paper.
No. Bitwise is supposedly they have a draft. It hasn't been approved, but I think it's a top 10 or top 15 index of crypto. And it's my guess is it's everything, the top 10 or 15 minus stable coins. Sometimes you see them. There's an index now. I think it was a Grayscale product trust that was converted. It's the top 5. It doesn't have stable coins. And I think it also emits like the Binance coin, if I'm not mistaken. I'd have to look that up to be certain. But so you see some of that stuff. So it's kind of like the top 20 minus a few things.
Yeah.
So
if you think about how does this compare? This is a good segue. How does this compare to traditional assets like stocks and bonds? We literally just compare and contrast to that.
Right. Yes.
So in its own world, in its own cryptocurrency world, you have less risk, which would be Bitcoin. You have greater risk, which would be the bottom of that list of 100, right? I would say then You have meme coins. I guess the least risk would be stable coin.
Well, there's no reason to invest in a stablecoin.
But how much upward movement are you going to have in a stablecoin in price?
In theory, zero, because it's supposed to be 1-to-1.
Correct.
If there's a depegging, it's only going down. It's not all of a sudden becoming worth more.
Yeah. So you wouldn't buy a stablecoin because you want it to double in price. That doesn't make sense.
No. So the analogy that I've been using lately around why you would actually hold a stablecoin is if you want to have cash, quote, literally in air quotes, in a crypto wallet that you can transact with.
Yeah.
So you know what you're paying is not going to be worth more or less tomorrow. That's the risk with crypto. Like if you were to use,
so you convert your Bitcoin, which is volatile in price, to a stable coin,
right,
which is pegged to the US dollar.
Correct. So you want to go buy coffee or whatever you want to do.
It's like selling your stock and buying a money market fund.
Except money market funds, there's a yield. There's no yield on stablecoin.
Good point.
But yes, very similar. I mean, it's literally like going to cash. Like dollars in your bank account, I think is the fair equivalent.
So let's take that one step further. So forget about buying crypto.
Yep.
I want to buy the company that owns the stablecoin because they're getting yield.
By law, the Genius Act requires they cannot pay the yield that they're getting, or a portion of it to the holders of the stablecoin.
And none of those are publicly traded yet.
Well, the Circle is. That's literally their business. So
what has their performance been?
Their stock really popped. I don't think that it stays that high. They were like a crazy, like multiple, like 200 something X at one point.
Oh, wow.
I think it's come down to earth recently, but
after the Genius Act?
Well, no, they launched after the Genius Act was a thing. I tried to find it real quick, but their stock price is, so their ticker is CRCL. They're at 134 and change. But since the last 6 months,
it's been a good pop.
Yeah. I mean, they IPO'd, I want to say at $33, if I'm not mistaken, or priced there. Within a week, they were at 260. It has since traded down. It's kind of plateaued the last month and a half.
I was just looking at the 1 day price. Sorry.
Yeah.
The 1 day looks great.
Correct.
The 5 year, not so good.
Yeah. I mean, they've been out for less than 6 months. They launched.
So they're at 132 a share and they were, let's like in the 140s.
Yeah.
So not as much upward movement as you would think.
So this is an interesting business to watch over time.
But the treasury yield's coming down.
Correct.
So that means
their margins are going to get squeezed.
Yeah.
So Circle's, not to get fully in the weeds on them, but like roughly 50% of their revenue is contractually obligated. Assuming 50% of their profit is contractually obligated to go to Coinbase, because Coinbase was a huge supporter of them early on.
Okay.
Put them on the exchange. So half the business doesn't really even go to the shareholders. It goes directly to Coinbase, right?
Right.
And then as the Fed lowers rates, the yield that they're going to be getting is even less. You start to see compression. Is Circle an independent business long term? I don't think so. I think they're going to get swallowed up by someone else. Heck, Ripple tried to buy them the week before they went public. So
yeah, still up 95% year to date.
Yes, I mean that first week pop really helps that number.
Interesting.
So
not endorsing that purchase whatsoever. But I just want to go down that rabbit hole for a second. Is that if the stable coins, if you own a stable coin, you're not getting the yield like you would in the money market. Then who are the companies that are getting the yield? Because those might be good companies to have in a portfolio at some point.
So, I mean, this is the only way you can get exposure to a company that has that.
Yeah.
PayPal has a very, very small business in this, but nothing that moves the needle for them.
Right.
And then the other one, the big one, Tether, is not publicly traded. They're out of the Caymans or something like that.
So it's its own asset class, I guess, to answer the question of how does it compare to stocks and bonds. So you have stocks, you have bonds, and then now you have cryptocurrency.
Right.
And then you have commodities, which would be a separate category.
So like 5 years ago, I don't think anyone was trying to convince anybody that crypto should be part of a model portfolio. That was not a conversation.
Right.
Now I think that's in the discussion.
With only 17% supposedly that have it in their portfolios. I will say the ones that have added it to their portfolios here have seen a 2.5% increase in rate of return over the portfolio time period.
Right.
It doesn't mean that it'll stay that way. It has been more volatile. On big crypto down days, I see it in the portfolios that have it. But on the up days, I also see it. And there's been a lot more up days than down days.
Yep.
But I firmly believe that everybody is going to be using and touching crypto in the future, even if they don't know it.
Right.
And it's going to be ingrained into the fabric of things.
Yeah. I mean, it's definitely the plumbing behind the scenes. You may end up using crypto as part of transacting. You don't even realize it. And you don't need to know. It's not like you don't need to know how the internet works to go use a website. That is exactly the analogy here. But I think that, at least in my opinion, if crypto is not in your portfolio, you're actually betting against it at this point.
Correct.
And probably not to your advantage long-term.
So yeah, we had an opt-in, and like I said, we've had more and more people opt in now, even in review meetings to say, hey, go ahead and add the crypto allocation. It's only 1.5% to 5% allocation, depending on your risk tolerance.
Yep.
But I went to Andrew a couple of weeks ago and I said, we allow people to opt in, but maybe we need to switch it to where they opt out.
Right. Especially as you're bringing on new clients. I mean, you just put them down the right path.
This is just what we do. And if you have a problem with it, then you can opt out of it.
Yeah.
But maybe default needs to be opt in. We do have a lot of passive clients that don't read emails and just say, hey, they're
just trusting you.
They're just trusting us.
Yes,
right.
Absolutely.
But I feel like at the time it was such a radical move. That people need the option.
Yeah, I mean, you were definitely on the leading edge of that, and I'm sure you did all your due diligence and all the good things.
Yeah,
but
absolutely. We're also one of the first companies to use all ETF portfolios back in 2004.
Right.
And when I looked at it, I was like, okay, this is the future. I'm not going to give the people an option to use a mutual fund or an ETF. Like mutual funds costing them so much money and capital gains tax and fees that the ETF just makes total sense.
Yeah.
Where this felt a little different.
And, also it really changed the game from a fee perspective. So the access to ETFs. So if you only want to buy Bitcoin or Ethereum, you should admittedly probably think about doing it in a brokerage account via ETFs, because the fees on those are like 20 basis points, 30 basis points.
Right.
If you go to Coinbase to buy the same exact thing, not ETF, but Bitcoin or Ethereum, you're going to be paying 100 basis points or 150 basis points.
Yeah.
That is different.
Yeah. More expensive.
And over the long term of your compounding money, that actually may be a noticeable number. So,
yeah. Okay. So what are ways to gain exposure without directly buying coins? We just talked about that.
Yeah.
ETFs.
Yep.
That would be the best way to do it. There are I don't know. I think there were over 100 proposals.
Oh, there's again, the
ETFs.
SEC is currently not operating. But I think it's over 100 ETF products. So it's going to be individual spot tokens.
Yeah.
And then there's some of these mixed products. There's 2X long, 2X short, all the different variants hot sauce products that people love these days. So
don't do those.
Yes, correct. But yeah, it's one thing that we haven't talked about is the SEC recently provided guidance on how to streamline the process for spot crypto products to be publicly traded, ETFs.
Mm-hmm.
So instead of doing the full 1940s Act, 41 Act, whatever it is, which sounds more strenuous and arduous, they basically came out and gave guidance that said if a spot token, so XRP, Ethereum, whatever, has 6 months of futures coverage on Coinbase, this is your path, and it's like the fast lane. It's 10 items or less at the grocery store. That's the path. And so you're starting to see some of those happen. I think those that want to do that now, even are on hold. Again, we're in the middle of a shutdown. Hopefully sometime soon we figure this mess out. But it would allow a lot more of these products to come online, even the Bitwise index. So,
who shouldn't invest in cryptocurrency?
Well, I believe if you don't have this is more financial planning. If you don't have a reserve fund for a rainy day, crypto may not be, or any investing for that matter, may not be the best.
I would say any investing.
Yes.
Typically, yeah. Order of operation is, if you got $20,000 your Amex card, you probably shouldn't be investing in crypto.
Right. If you have credit card debt, crypto could have high returns, but it probably needs to take care of that debt because obviously that's more important. Yes. Yeah.
So debt elimination, emergency reserve, and then you start investing. One thing that we had a podcast on recently, it's crypto inside your 401k. Can't really do that. There's not a crypto mutual fund right now. Probably won't be if I had to guess.
Correct.
So really the only way to do that would be to sign on to your brokerage link and invest in Bitcoin or
ETFs
in that space, which is not a horrible idea. Unfortunately, I see people who do that execute it very poorly, and then they have too much a percentage. It starts doing really well, then they're going to sell it, or it does really, really bad and they sell it. Just take 3% of your balance, move it over there, and then put it in there and leave it. And then once a year, maybe add a little more to it in order to keep it at 3%. But you can, our platform for 401k plans runs through Betterment, and I know that we can get it there.
The only twist on what you said there that I would change is I'm not a big fan of people going and just buying a token or a ETF.
Yeah.
I can't wait for these index products to get out there because it is no different than stock picking, and it is not easy.
Right.
So like once, you can go buy the Grayscale top 5 index now, or wait for the Bitwise, or there's a bunch of these coming. Wait 6 months and you'll have options. I think that is what I would steer people towards if they're going through like a brokerage link or something. So then like they don't have to actively manage a crypto portfolio, because that's really what you're asking them to do.
Yeah, right now, but there's only a couple.
Right. You only have options. Yeah.
I would agree with that. I would just say don't do it at all inside for retirement accounts until you have the right fund available.
Yeah. But it's not happening tomorrow, but I was reading last week that Vanguard is starting to do some education internally around crypto, which is like, if they were the big like holdout here, right?
They're the holdout for everything.
And it doesn't matter. Even if they say yes tomorrow, then the trustees of all these 401k plans have to approve it. But again, we have to make that first major step for it to even be an option. So
yeah, absolutely.
So there's money to be made. They will eventually do it. They may just take a while to get there.
So final question is, where do we see crypto in the next 5 years? So in 2030, when we say we did a podcast 10 years ago.
Yeah, absolutely. These whole things, like looking out more than a year, 3 years, are tough. But I would say we certainly have regulation in place. I think we have that by the end of the year. That allows the this space to really start blossoming. I think if you think back to, try to use an analogy here, if you think back to when the internet was there, you only could read stuff, and then you were able to buy things with a credit card on the internet. That was the big value unlock for e-commerce. This is going to be the big value unlock for crypto when regulation can come along and like allow things to happen. And again, I think that, this is my lens, but I think that crypto first takes over from a business perspective, all the plumbing behind the scenes for cross-border payments and all the things around business. And it doesn't even have to be value. It could be like using a blockchain to do inventory management and all sorts of things that crypto is trying to solve for. We'll see that happening, and it's going to be like, it doesn't happen. The next day you look around and it's everywhere. That's the kind of moment I think that we're working towards. In 5 years, I think it's certainly achievable, all that stuff in 5 years. So
I see that the institutions have led the way here. If you have 35% of institutional investment, these are forward-thinking people,
right?
And we see a lot of things come. They started direct indexing, started institutions first. Now it's come down to individuals. I think that's very telling to me that the large investors have bought on, and even in corporations themselves have bought into this,
right?
And I think you can't what I tell clients is, you can't see exactly what this looks like in 10 years, but you need to be a part of it.
Correct. I mean, it's a massive wave. Again, there's so much stuff trying to be figured out now. Like, it's about betting on the big wave, in my opinion, versus trying to bet on the individual, like, I don't know, things that happen around it, right? You're just trying to ride the wave because it'd be great.
There still could be some major pricing pullbacks along the way.
Almost guaranteed.
But again, that's why we're saying, hey, you're not putting 50% of your money in this. You're putting 1 to 3%.
Right.
5% on the top end, but most investors will be probably around 2.5 to 3.5%. If it goes to zero, it doesn't really derail your portfolio at all.
Right.
But where the positive side is huge.
Right.
Huge.
Absolutely. And it's, humans are great at trying to predict things. They're terrible at trying to predict how things compound exponentially. And these are one of the markets where I think even us, we are underestimating in many ways the power of what we will experience over the next 5 years. So,
well, Robert, thank you for coming back and rehashing 5 years ago.
Yeah, it's fun.
we've been doing this podcast. This is episode 312. There's a lot of podcasts to cover. We typically have thrown in at least once a month a cryptocurrency focus along the way, and that's partially to get our listeners comfortable with the future and what it's going to look like, and to be a little more educated. And you've helped certainly do that. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management, or want to schedule a consultation to meet with one of our fiduciary financial advisors, you can do so by going to wiserinvestor.com. You can also reach out to Robert at Teton Crypto Capital, which is linked in our website, or you can email him at
robert@tetoncryptocapital.com.
And if you're a Wiser client and, hey, you should have opted in for the cryptos, you just realized that, just shoot your advisor an email and let's get that added to your portfolio. The good news is that we're not getting paid any more or less to add crypto to your portfolio. Yep. Being a fee-only firm, we have nothing to sell, just the process. Thanks for listening, and we'll see you guys again next week.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This podcast is strictly for informational purposes only and is not to be considered as investment advice or solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investor advisor with the SEC. The host and/or guests may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guests of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.